everybody. Welcome back, founders. Welcome back, Kirsha.
We're back.
We're back. We had our sip of water and we're going to just dive right into it. This episode is all about how to creative ways to controlling our cash flow through COVID. Part 2 of this episode is understanding a little bit better about cash flow and its impact on the bottom line. And Kirsha, you were just sharing with us that cash flow is not profit. There's a distinction between the two. And, quite honestly, as I was preparing for this episode, I am one of those people that oftentimes think of cash flow as the money that's coming in, right? It's like, where are those top line dollars coming in? How are they coming in? When are they coming in? Because it's very different to be selling something one day, but it might take a couple of days, sometimes a couple of months if you're in oil and gas to actually get that money in. Yeah. So you're right. My mind typically goes to when is the revenue going to be received and then into the bank account. But now you're introducing this concept of actually understanding the cost of goods, when the cost of goods are due, when all of those expenses are due. And then when we start to subtract those expenses from it, then we're left with a very different number that actually ends up in our bank account. So do you want to pick up on that and just kind of share with us some ideas or maybe some of the things that you see oftentimes that get business owners in trouble in terms of versus the top line and the bottom line and where they get led astray?
Okay, one of the first things, and we have to start with it, is taxation. So taxation is one of the biggest expenses for any business. However, business owners, you are not planning for taxes. You're waiting until it's almost the deadline. You take your box of receipts, or if you have an accounting software, and say, this is my situation. That's not a tax plan. So you are not exploring enough ways to save on taxes. So after your profits, the next step is taxes. So you need to now take that step back to find out, how is it that I can save on taxes? What are the deductions, the credits, right? What are those ways in which I can minimize, and we're talking legally, of course, minimize legally how I can pay less taxes based on my personal situation, my business structure, what is happening in the business environment, the tax regulation, all that in the mix. So that is one of the ways in which I do see persons, business owners paying out more monies than they need to, more cash leaving your business than it needs to be leaving, because you're not planning for taxes. You don't have a plan to save on taxes. That is one way in which I do see you paying out more than you need to. Another way is where it all starts with having a good set of books. So there's chaos in your business. So you don't have a proper chart of accounts, which is where we classify the transactions of your business uniquely to your business. So you have wrong categorization, missing transactions, incomplete transactions, all that impact the taxes that you pay. So for example, if you have $1 of a transactions that's not in your business, an expense, that can cost you 50 cents more in taxes, depending on your tax bracket, your tax rate, and all that, of course. So these are some of the ways in which you are spending more than you need to. So you need to understand that, yes, it's important to focus on the top line. However, let's not stop there. Keep your eyes on all the moving parts in your business. Have that support to have it done. And you're going to see that you're going to have more cash flowing in your business when you do keep your eyes on these different areas, for sure.
So on that note, then, my head is going into 3 different directions right now. It's thinking about the role of the bookkeeper, whose job it is to enter in the data.
Yes.
Thinking of the role of the accountant, whose job is ideally to mitigate the taxes, right? And so getting a handle on them. I know many business owners don't even know what questions to ask bookkeepers. They don't even know if their books are being set up properly. I'm just going to call it like I see it. In most cases, entrepreneurs don't know that, right? What advice would you have for these entrepreneurs, these founders that are really just trying to take the first step in getting themselves better organized?
So let's take a step back and remember that accounting is a broad topic, a broad role in your business. So you have the bookkeeper who's going to be responsible for, and as I'm elaborating, there's sometimes overlap. You might have one person doing everything. You might have separation of functions, but the bookkeeper, that's the first main type of accountant. That's going to be where that person is entering your transactions, right? They're getting your receipts in, your invoices in. They should be doing a bank reconciliation on at least a monthly basis for you as well. You also have another role, which is a CFO type role. They are checking what the bookkeeper has done. They're helping to ensure you have enough cash in your business, managing your cash. They're helping you to support you with setting up that tax plan. They're helping to say, okay, you're at the wrong price point here. That sale is not profitable. You need to have more cash on hand. They're getting into, I call it behind the scenes, looking beyond the numbers in your business. And then you do have the accountant or the tax expert. And what they do, they are focusing on preparing your year-end financial reports if you need to get it for the bank or for whatever reason, and also filing your tax returns. So a lot of times there's a misunderstanding and a expectation. So you think that, okay, your accountant is gonna, and again, it depends on the type of accountant you have working with, right? You're thinking they're gonna help me with cash management. They're not gonna do that. And as a business owner on that side, it's lack of education, and from the accountant side, they probably saying, okay, you might have that covered already. It all depends. So these are the different eyes that you need on your business. Just like you go to a general practitioner as a doctor, but if you have a heart condition, you're going to go to a specialist, right? A heart specialist. You need these different sets of eyes on your business. And it is best that they're different persons, because one can check the other, you know, keeping separation of functions. And if the bookkeeper makes a mistake, the CFO can catch it, or the CFO is, of course, working with the tax expert, the accountant for your year. And so you do need different eyes on your business for sure.
Okay. So 2 questions there. The objective with cash flow, if we go back to the first phase, the objective is that we're looking to have 6 to 9 months, roughly.
Yes.
With the numbers that you gave me, of cash flow that's available to us. So cash sitting on hand, whether we call it retained earnings or cash in the account, that will help us with the expenses based on the sales, to cover the expenses based on the sales that we have projected coming in, and any sort of economic downturn that we have to weather, right? Lord forbid, another third lockdown or whatever that might look like. So we're looking for 6 to 9 months. You're bringing up the CFO, and I know that many founders, especially if they're small business, they don't necessarily have a CFO. That might be their job as they're trying to do everything else in the business. But there are CFOs for hire, right? And maybe, Kirsha, this is a piece of what you do, where you don't need to have someone full-time in the business that's managing this for you. What would be your recommendation for a small business? Is this someone that does look at things on a monthly basis, or is it quarterly, that will look beyond the numbers to help you better understand what the numbers are telling you, what your cash flow position looks like?
And definitely at least monthly. And again, it depends on your business. There are situations where your business is in crisis. You need a daily review. You need daily, what's my cash position? What's my profits? You need that daily eyes on. So again, it depends on where your business is at. So definitely at least having monthly eyes on your business. And it doesn't matter the stage you're at, you need to have that person on hand. It can be on, as needed basis, at least a month you're reviewing your numbers at least. And then as other ad hoc projects come up or situations, they can dive in and support you there. But you need to have at least a monthly review of what's happening in your business, because without doing that, you are operating, you're being guided, blindly. And that's really a tough situation to be in, right?
Yeah, absolutely. At cost to your business. And I know there's a lot of founders that are either watching this or listening to this that have been avoiding their numbers because they're afraid of what their numbers are going to tell them. But, ignorance is not the answer here, right?
No. And your business is ultimately your responsibility. And you've probably heard the term, this company, we've seen companies going bankrupt, and we hear, they went bankrupt overnight. It's never overnight. There are signs that are ignored or not understood. So the number one reason your business is going to fail is not looking at your numbers, not paying attention to your cash flow. And I think it's definitely education. That's why I'm so passionate about it, because I've been in the corporate side, and I've seen the strategies we need to make multi-million-dollar corporations keep growing and growing, right? So in the same way, you need to realize that it's not always about the sale. You need the sale, yes, but if the sale is not profitable, if it's not leading to cash in your bank account, then it doesn't make sense. And yes, I know there are times some business you're strapped for cash, I'll just take the sale in, but that should not be an ongoing way of operating your business. And that's why you need that support to help you to, unpuzzle all the
Yes. Yeah. Piece it together. So, so I'd like to, I want to cover off one thing before we actually jump into what are some of the common flags that you see in businesses. But I'm coming back to the very beginning of this segment where you had talked about taxes and you had talked about profit. And I'm curious for you to kind of weigh in on this. One of the things that I advocate for when I'm working with a business owner is to take the taxes every month. I know that in forecasts we plan for them, and unfortunately it's these forecasts, right? We do once a year, we sit down, if we do them, and we build this beautiful sheet, or it's because we're looking for money and we do a forecast. But not very often do I see a business owner that sits down at the beginning of the year and puts all their numbers together. But one of the things that they do is they typically forecast for taxes, and they find a way to get this beautiful net profit at the end of the year. What are your thoughts on actually every month when that cash comes in to set aside the taxes and to actually set aside the profit? Put it in a different account. You can always draw from it if you need it, but if you had planned to have a 3.5% net profit that year, or that month, excuse me, just setting that aside. What are your thoughts on that?
I know that that's a profit first method. A lot of businesses subscribe to that. That's fine. Nothing is wrong with that. However, really putting it aside in the different bank accounts, that's just saying the money's there. But in actuality, in terms of the analysis, is it really 3.5%? And also remember, when you're putting aside monies for taxes, that's just a part of the picture. You might have gotten your estimated tax installments from the CRA, you're doing that. However, that's just a part of tax planning. Periodically through the year, the relationship I have with my clients, I'm going to buy this. They call me, I'm going to buy this. Should I wait until next year? Should I pay this dividend now, or should I wait? We have that relationship because these things impact your taxes. If you're making certain purchases in this year or the next year, that's going to impact your taxes. So it's diving deeper. At times you look at what's your profit looking like for the year. Do we need to implement any new strategies? These are some of the things we talk about. So that is why it is so important to always have your eyes on the numbers. So yes, putting funds aside in different bank accounts, that's good. And that's good, but it's getting even deeper than that.
Not enough.
You might be saying, okay, I have this money is retained in my business. Retained earnings is different from your cash flow as well. So it's getting all the different pieces together and looking at it holistically for sure.
Okay. It's a good start, but it's not enough is what I'm hearing you say there. Okay.
Yeah.
All right. So what have you been seeing impacting cash flow? What are some of the flags? What do we need to watch for?
So definitely a few things you need to look for is one, review, like, let's say for the last 6 months of your business, past 6 months, have you had to constantly be putting cash in as the owner, shares? Have you also had to say, okay, I need to increase my line of credit. I need to get new credit cards. I need to get a loan. Have you had to be putting money in your business, and why, right? If it's you're probably expanding and you needed that buffer for capital expansion, equipment, or you're going to have a new building, that's a different case. That's a deeper analysis, of course. But if, for example, you constantly have to put monies in to meet payroll, to meet your rent, to meet your lease for just day-to-day operations, that's a red flag. And I'm not talking about a one-off situation. I'm talking about where it's ongoing. It's becoming the norm where, I've seen situations where for years that's happening, and that's a huge red flag, right? So that's something to look out for as a business owner, entrepreneur, the CEO. The other thing is, are you constantly in a bank overdraft, right? Is it a case where every month you're getting into bank overdraft, if it's a constant bank overdraft as well, that again is another red flag to look out for. Another thing too is, what is your accounts receivable? The persons who owe you, what is that looking like? Is it that they're owing you extended periods? You're not sure. Do you have no collection strategy? That again is another red flag to look out for in your business. And you might be saying, okay, my sales are cash sales. However, you might be going to a third party provider, credit card processor, merchant processor. Are those monies hitting your business? So your financial systems and flows, processes in your business will also determine if there's a red flag there when it comes to cash flow as well and operations.
Okay. Great things to watch for. When these red flags come up, where should they turn? Where should they find help? Because it's not necessarily the bookkeeper, right? I'm thinking banks, but it's not necessarily the bookkeeper. It's not necessarily the accountant. Is this where they do a search for CFOs?
Yes, definitely. So okay. Definitely, yes. So definitely, because I have situations where a company, they were not having a cash flow problem. It wasn't, they had monies in the bank. However, when we connected, we realized that you had monies in the bank. However, their underlying problem, you had monies, but it would not last you for the next 3 months. So they had persons owing them too long. There was no flow, no systems flowing. Yes. So yes. Again, it depends on what's happening in your business. So if you are experiencing these things, or you've never had someone give a second set of eyes on your books, then you need to reach out. It should be an ongoing process in your business for sure. So that okay. Depending on what's happening, okay, what's the next step? What's the next strategy?
Okay. Can I share with you a couple of things that I always see from clients? Sure. And you tell me if you see them too. I have to say, from the top line, one of the biggest things when cash flow is impacted, I see them not breaking out their product streams. So they don't know what product is actually selling. It's just this big bucket called sales. Yes. And they're like, I don't know if it's A, B, or C. Life's been too busy. I can't figure it out. So yes. I often see that. Yes. And to your point too, just to elaborate on it, the collections piece, right? Sometimes sitting over 90 days or 120. And I know that, with a resource-based business, you're in Alberta, and you must see this oftentimes with oil and gas, right? 120 days to wait to get paid. Yes. 120. That's crazy. That's 4 months. Exactly. That must just drive small business right into the ground. Mm-hmm. Really.
And issues like those, yeah, you have to now go back to the original source. What is the contract saying? Is it that you need to take it from the contract perspective? Let's review this contract. What are your systems in place? And that's getting into solutions to for managing accounts receivable and all that too. Yeah. Mm-hmm.
Okay. And then what I oftentimes see in cost of goods, this is, and I know you work with many construction-based businesses and larger businesses, but from a sole proprietorship perspective, what I often see is this sole proprietor who is not taking into account their labor when they go to price, right? So they're offering, for example, massage services, and they're doing it all themselves. But then it's they're charging what they think the industry standard is, but they forget about all of their operating expenses that they need to cover as well. And then they're the ones that get paid at the very end of everything else getting paid, and they're taking home a meager salary, which is obviously impacting cash flow. And to taxes, they forget to pay for taxes for themselves. So then they're left with a big cash tax bill at the end of the year. Do you see that oftentimes too?
I see that, and oftentimes it goes back to that education piece, because a lot of business owners, they're great at their skill set, they're experts, they bring such value to our economy, our province, our country at large, and the world too. However, not knowing how they impact each other, the different moving parts in your business. The wrong price can make or break your business. Sometimes you're like, business A is charging that price. I don't want to go too higher. I don't want to go too lower. However, you have to look at my business. This is me. My service is what I bring to the table. I can go higher. I can go lower. Also, are you thinking about all the expenses, the costs that are related to, producing this service, offering this this product for sale. That's another thing to look at, because sometimes they're missing parts. You forgot, okay, I didn't think about this, that. And then sometimes when it's the sole proprietor, the smaller businesses, you don't have that separation with the business and the personal. So it's all intertwined. So you're not able to easily demarcate what is your business doing. Is your being profitable, because there's that overlap. And yeah, so I do see it.
Yeah. Kirsha, you're so right. It's like you said, they're just operating blindly, right? They're not necessarily doing the math. They are taking it way too personal, with respect to getting this business up and going and not calculating all of the numbers. I think that's really important. I know that, when business owners are losing money on the bottom line, it is typically, from what I've seen, it's because their pricing strategy is off, because they haven't factored in all those small little expenses that you're speaking of into that pricing strategy. So please, please, please do the math, get that figured out, and that will help with your cash flow. All right, Kirsha, let's leave part 2 there. You've given us so much to think about here. My head is spinning. So I imagine the founders are like, okay, there's a lot there. But what I'm hearing you say as primary takeaways from this is, the first thing is just to catch the flags, right? It's just, if you feel like any of these things that Kirsha has been talking about in terms of accessing your line of credit, or if you're constantly in overdraft, or if you're using your credit cards right now, this is where you reach out for help. You can actually reach out to Kirsha. Her contact information is going to be down below. And Kirsha, I'm putting you on the spot, but I would imagine if you're not in a position to help them, you can certainly let them know where to turn next.
Yes, for sure. Yeah, definitely. Okay. Lead them in the right direction, for sure.
All right. Thank you for watching this segment of creative ways to control your cash flow through COVID. We're going to come back for our final segment, which is all about solutions and different ideas that will help you better navigate and secure that cash flow through these unprecedented times. Thanks, Kirsha. We'll see you back here for part 3. Go grab a cup of coffee or a glass of water, and we'll see you back here shortly. Bye for now.